there, everybody. It is Sound Off with Sinkoff. Brian Sinkoff here, broker owner of the Sinkoff Realty Group, joined by my man, Drew Aiello of Fairway Independent Mortgage.
Good afternoon.
Is that right?
Yeah.
I got it. We're here in the Sinkoff Realty offices in Delmar, New York. This is take 2. Do we have audio? I hope we have audio.
What's that?
Wow, I don't know what is going on.
Someone said congratulations.
Yeah, what does that mean? We
just
had
special effects.
We just had fireworks in my live. But anyway, we're here, we're live. We're going to talk to you about the housing market. I'm going to make sure that we have audio before we go 5 minutes into this deal.
If anything else fails, we have a good picture of your left ear.
All right, here we go. We got it. We got it. All right. Just doing that. Okay. So
we did it.
We're a little bit late, but that is not for us for lack of effort.
Better late than never, right?
We were did about 15 minutes in, and then we had so many viewers tell us that we had no audio. We have audio now. I hope we do. I think we do. Amanda, good to hear you. Thank you for telling us we had no audio. I appreciate it. You too, Kara. All right. So, Drew, let's get right into it. Enough of the song and dance, the singing and the dancing. Let's talk a little bit about 2023. I'm going to give you some real numbers, some stats, some factoids, and then we're going to break this down. What we're going to do here on this edition of Sound Off with Sinkoff, the mortgage chat, is we're going to talk about the year that was 2023. What were some of the challenges? Then we're going to look ahead to 2024. We have some great advice for you if you're thinking of buying or selling a home, and help you navigate this interesting housing market.
Help you become more competitive.
Yes, exactly. All right, for a 12-month period, October 22 through October 23, we had pending sales in the capital region down 17.4%. Wow. 17.4% of houses, less homes were sold. Now, why? 3 reasons. 1, obviously, lack of inventory. 2, the interest rates were high, which may have turned some buyers and some sellers off.
Could have.
Right. Number 3, just wasn't a lot of houses. Sellers are like, I don't know that I want to sell. I got this great rate. The rates are high. They're not going to put their house on the market. Right. Fair enough?
Fair enough.
You all with me?
I agree. I think there's some fence sitters because rates in October were up near 8%, and for most of the year, obviously in the 7s. So if you have a 3% rate, it's real hard, I guess, to mentally get over losing a 3% rate that you currently have and going up to a 7% rate.
Yep.
So
that was the
toughie.
I had a lot of sellers. I had that discussion with them over the last 5 months.
Right, it's a hard hurdle.
Brian, I got the 3.4% rate. I'm going to have to get into a house at 8. Yeah, I'm going to get a nice number for my home, but I'm going to pay on the other end. And Drew and I have been saying here on this Facebook Live once a month for the past 8 months, date the rate, marry the home.
Plus, I have a solution to that.
And we're gonna get into that because if there was a problem, you'd solve it.
Yes.
Check out the hook while his mortgage revolves it.
I'm a DJ.
All right. Median sales price was up to $285,000 for the last calendar year.
That's crazy.
I can't even think that was that. I lost my train of thought. Market-wide inventory levels were down 14.1%. That is from October 22 to October 23.
And let's put it this way. 2022, they weren't anything great either.
No.
So the fact that they went down another 14% on top of what we were down on in 2022, that's considerable. And I think, as you said in the previous segment,
the one that no one heard,
right? The inventory right now is about 1.5 months, and in a normal market, it's
3 to 4.
So,
right.
So we're definitely the basic stuff. I went to Boston University. I was an economics major. This is economics 101, supply and demand. Obviously, more demand, not enough supply. So you see an appreciation on values, but obviously in the statistics, you're seeing less transactions because there's not a lot of houses out there to buy. So I think some things moving into 2024 that will help the market is we've already started to see it, is a decrease in interest rates. So you're going to get a lot of the fence sitters coming back into the market, which doesn't fix the supply issue, that's for sure. But maybe, just maybe, it might fix a lot of the people that are sitting on a 3 or 4% interest rate, maybe take advantage of all the equity they've accumulated over the last few years and put their house on the market to upgrade or downsize or, move in general. So we're hoping that helps a little bit, because I think if you had a 3% or 4% rate and you went into the 6s or the 5s, I think mentally, with all that equity, you could overcome that hurdle. When it was 7 or 8%, that's a little tough pill to swallow.
Well, and you got to also remember, I think one thing that we need to keep in mind is, and this is, I really have this conversation I probably have this conversation twice a day. When I'm out and about, I got the name tag on, I'm bringing it, I'm slinging it, I'm triple dog swinging it. I don't even know what that means. But people come up to me, they say, Sink, boy, the market's terrible, isn't it? And I'm I hate that. I'm like, it's not, really not. It's not terrible, but here's why. If you sell your house, you're going to sell it in, 48 to 72 hours, number one. Number two, you can always refinance, marry the house, date the rate. We say that all the time, but the reality is, guys and gals, you're never going to see 3% again. No. That was an apocalypse. That was an anomaly. That was we had to get drastic to sort of save the economy.
You don't want to see 3%.
No, that means something bad happened.
That's like a pandemic.
Right. Something bad happens at 3%.
It's a 9/11. It's a pandemic. It's a financial crisis, 2008, 2009.
It's catastrophic.
That's
something.
when you see low rates.
Yeah. So I tell people, get off the 3 and even 4%. Where should it normally be? 5, 5.5, even 6% is normal. The average in the last 40 years, I believe the average mortgage rate, you would know better than me, it's in the 7.
It's actually about 8.25.
Yeah.
Yeah, it's up there.
So, let's just put things into perspective.
It's up there. Yeah.
Albany County, I'll just give you this last little factoid.
It's up there, Steve. It's up there.
What is that from?
Family Feud. I love that show.
The new Family Feud.
Yeah.
That sucks. That sucks.
Oh, he's funny.
Come on, he's all right.
He's so funny.
Did you ever see the one with Jackass? When Jackass, it was a celebrity Family Feud. That was phenomenal.
Yeah, those are great.
Yeah. Median sales price for Albany County. I'm just not gonna bore you to tears, but the average median sales price in Albany County was $286,000 in 2022. November 2023, $332,000. It appreciated 16%. I wanted to talk to you about appreciation, Drew, because in a normal market, a year and year-over-year appreciation is 3 to 4%. We had 16% in Albany County last year. That's not good. It's not normal, but more importantly, it's not sustainable.
It's not sustainable, and I think we thought that we would see 5-6% in 2023. I think we're going to come in not 10%, but maybe 8-9 when it's all said and done, which is better
in terms of appreciation.
In terms of appreciation,
right?
Next year, I think they're expecting. This is Fannie Mae, by the way. Fannie Mae usually is super conservative. They say 2.5% in 2024. I disagree with that. I think you'll see anywhere around 4.5 to 5% in 2024. They're usually very, very conservative, and they always revise their figures throughout the year. So I think, again, when you say, oh, the market's bad, the market's awful, when people say that, what would you rather have, a decrease in your value of 10, 15%, or hard to find a house, but values are still increasing like we're seeing? That's what I consider a bad market, is when prices are going down. Finding a house, it's a challenge. But it's a healthy market. It's a good market.
Well, you hit the nail on the head, Drew, because when I got into real estate first in 2012, it was not out of the realm to see a house on the market for 3-4 weeks. Now I tell a seller, if your house is on the market for 2 weeks, that is 1.5 months to me. In other words, if I see a house on the market for 14 days, I look at that as an over 30-day stale listing. Right. To me, that's a stale listing. Your house hasn't sold. Why isn't your house sold? Chances are it's probably overpriced. But I remember back in the day when I first started real estate, if you gave the seller asking price, like you could buy the house day of asking price. They're doing backflips.
They would stop showing it.
Yeah, that would be the end. So.
Now it's like, if you don't go over a little bit,
you have no shot.
They're not talking to you.
No, it's pick your poison. It's literally pick your poison. Do you want, again, we say refinance, but I will say this in terms of trends of 2023. I'm going to give you some like stats that I'm not going to give you numbers, just kind of give you my own little anecdotal stories here. As the year started to progress, maybe after June, we didn't have 7, 8 offers on houses anymore.
Right.
You know, we had 1 to 3.
Right.
We didn't have to go 40,000. This will make you feel a little better if you're a buyer. And you know what? If you're a seller, it should make you feel better too, because maybe you're going to be on the buy side when you're selling. On the sales side, you know, houses still in any, here's the thing. And let me talk about school district in a second, but let me finish my train of thought. You know, you have 1 to 3 offers now, not 7 to 8. You're not going $40,000 over. Maybe you're going $10,000 to $15,000 over. It's still over the asking, but it's stomachable. It's digestible. You don't want to dry heave when you hear what the price sold for. And I've told you stories, the house in East Greenbush that sold for $70,000 over the asking price in 2021. That was like crazy. That was not healthy. It was not sustainable. Right. But when someone always asks me, Brian, how is the market? The question I have is, are you buying or selling? And then the second question is, right, how's the market? Well, are you buying or selling?
Depends what size you're
Depends what you're doing. But the other question I have is, well, Brian, is my house going to sell? House is in desirable, and again, I'm not violating fair housing here. I'm saying you look up the school districts yourself, but houses in quote unquote desirable school districts that are priced right are going to sell in any market. And to be honest with you, houses priced right in any school district are going to sell in any market.
Right.
Any market, if your house is priced right, it's going to sell, whether the rate's 8% or 3%.
Not everybody buying a house has kids that are going to go to school.
So and again, it's just, if a house is priced right in any market, it's going to sell. Is it going to sell in 24 hours? Maybe not. Is it going to sell, you know, for $60,000 out over the asking? Probably not. Will it sell? Absolutely. Are you going to get to where you want to go? Absolutely.
And what was normal before the pandemic? Was it 30 days or 60
I mean,
days
it was,
on the market?
you know, it was, I mean, I can only speak to my stats. No, it was, you know, you were under a month, 20 days, depending. But I can tell you, I can actually look the stats up. Last year, my average time on the market for my listings was 3 days.
Right.
My average time on the market on the buy side was probably 9. Right. Again, that's us buying a house.
And now instead of 3 days, is it a week and a half?
It's longer. Yep. You know, it's definitely a little longer.
Especially this time of year. I think people obviously preoccupied with the holidays. By the way, Happy New Year, everybody.
Yes, Happy New Year. And again, like this post, people, chance to win a $25 gift card, just like the post.
Was it again?
Like the post.
Because we said it in the first segment, then nobody could hear us.
So like the post, like the post. And by the way, you can like the post at any time, but to be eligible for the gift card, you have to like the post when we're on.
Oh, yeah.
Yeah, that's a feel free.
That's good. So one thing I wanted to say.
Yeah, go ahead. Shoot.
I honestly thought, looking at a year in review to present day, where we are last year, this year, and we'll sum it all up in January, of course, but I thought rates this time of year would be about 5%, 5.5%.
And we said that, and we'll fall on our sword.
There was a couple that I think the employment situation was a little stickier than we expected, and now we're starting to see it happen. So we're a few months behind on that. I see some good momentum going to 2024 with lower interest rates, so that's why I have to reiterate, people. You really want to buy. Look at, and if you don't trust, you know, Drew Aiello from Fairway Mortgage in Clifton Park, New York, trust people like Barbara Corcoran, who's on the Shark Tank, that owns a crazy successful billion-dollar company in New York City on real estate. She feels that over the next couple of years, you'll probably get 10 or 13%, which is what we were thinking. You know, maybe 5% a year. So over the next 2 years, 10, 13%, depending on the market. You look at guys like Kevin O'Leary. You look at guys like the financial wizard that's syndicated, I'm drawing a blank, Dave Ramsey. He says now's the time. These are financial gurus that are hugely successful in the stock market, the real estate market, housing, home ownership, wealth creation. Now's the time, because I can bet you dollars to donuts, 6 months from now, that house will be more than what it is today.
And that's a great segue, Drew. You looked at my notes into 2024. Now we recap 2023. Low inventory. The cost of a house went up, and we didn't have a lot of houses for sale, and we had a lot less sales overall. But let's talk about 2024. Drew and I have been telling you for the past 4 months, and you say, well, Brian, you're just saying, that because you're saying that. We're saying now is the time to buy a home. Like, I'm going to reach out to all my buyers sort of on the fence come January, let the holidays settle in a little bit. And I'm going to tell them you need to do this now, especially if it's your first home and you're maybe afraid to get in that ultra competitive bidding war.
Right.
Now is the time, because we have literally, go back to our Facebook Lives, we have literally been saying since September or August, once the rates dip, it's going to be like eBay on crack again.
Right.
It's going to be every balls to the wall. Buyers are going to get out in full force. Sellers are going to start to get a little looser, and they're going to probably put their houses on the market. There's going to be more competition. So yes, there's not a ton of inventory. And yes, you might be paying a little higher rate, but call me nuts. I'd rather pay a little higher rate, not quote unquote go super high on the price of the home.
Right.
And then refinance when the rates calm down a little.
And use, if you want a lower payment and you know that rates are coming down like we all expect, do a 1-0 buy down. We'll buy down the rate for you. If rates are say 6.5, 6 3/4, we'll buy that rate down for the first year to get you into the 5s. And that gives you 12 months of 5-something% interest rate. And then we'll refinance next year when rates are permanently down to a 30-year fix. So that 1-0 buy down is a temporary buy down where we as a company will buy that interest rate down for you a full percentage point. And then if you really want to get aggressive and have a much lower payment, there's things called a 2-1 temporary buy down, where the rate goes down 2 full percentage points in year 1, 1 full percentage point in year 2, and then it stays fixed at the prevailing rate after that. It's not an adjustable. It's much safer than an adjustable, but a much lower interest rate, much lower payment than an adjustable even so. And again, that gives you 24 months to refinance. So if you're that home seller and you don't want to give up that low 3% rate, we have a way to get you into the 4s.
Yep. So
to be preemptive in getting your house on the market. So
Drew'sTeam.com is the website. Drew Aiello, Fairway Mortgage. All right, I want to talk a little bit about something. We love to give tips. We love to give factoids. We love to give tips. We like to have jokes. I'm going to give you a huge tip for 2024. Just the tip here, guys. No, you didn't. Oh, yes, I did.
No, you didn't.
Not soon enough as far as I'm concerned. But I'm going to give you a tip. If you're a buyer who is really having trouble and you're stressing and you don't want to get into the market, I'm going to give you the way to get a house. You're going to have such a damn good offer. It's going to slap you silly with joy, right?
Yeah.
And that, Drew, I'm telling people, don't get pre-qualified. Well,
Don't get pre-qualified.
Hold on. You're like, what? Sinkoff. How can I buy a house if you don't get pre-qualified? No. Drew.
Should we be worried about that?
What? No, it's just it's fine.
Okay.
When he saw my computer was frozen. You ruined the punchline. I was gonna get to the denouement of the play. And then you spoiled it. That's like a good SAT. You don't even know what that means, do you?
No.
All right. So it's not a pre-qualification letter, Drew, but it is
It's not even a pre-approval letter.
It's not a pre-approval.
Don't get pre-approved in 2024.
That's the key. Do not get pre-approved in 2024.
Get an underwritten approval.
Yes.
Underwritten
approval. Say it again. Underwritten approval. Now, what is that? I'm going to let Drew explain what that is. All right, let me tell you what a pre-approval means. Well, you tell them. It's your gig.
Well, there's 3 levels. Pre-qualification, talk to a mortgage person, you tell them your income, you tell them your assets.
Boom.
Done. Easy peasy, but we haven't verified anything that you said. Not that we don't trust you, but what you think your income might be and what it actually is.
Which your credit score is.
Could be different.
Yeah.
So that's a basic pre-qualification. It's probably not worth the paper it's written on. Then you can upgrade to a pre-approval where you actually send us your pay stubs, your W-2s, your bank statements, tax returns maybe, and we verify your income. It's bona fide. We look at credit and income. Life is good. But now, if you want to be competitive, if Brian and I are competing for the same house, and Brian has a pre-approval and I have an underwritten approval, that means an underwriter looked at my income, my assets, my pay stubs, W-2s, bank statements, you name it, everything under the sun, issued a full-blown commitment letter, even though I don't even have a house yet or a contract, so that if he puts his offer in with a pre-approval, I have an underwritten approval, all I need is appraisal and title to close. Close in 2 weeks. There's zero risk of that deal not going through because it's already underwritten. And in fact,
Here you go. This is good.
we'll even give you a cash guarantee. If for some reason we can't close on that house, we'll pay the seller cash for the house, or we'll give them $10,000. They could go sell the house to somebody else.
Cash.
So it's a cash guarantee, underwritten approval. You just have to stick yourself out from the crowd and become noticeable in competitive offer situations. And this is going to be the mantra. This is going to be the theme of 2024 when rates dip down into the fives and we have this buying frenzy again.
So that's every one of my clients is going to do that. And if you're one of my clients or you want to find out about that, you know how to reach me. You can direct message me, sinkoffrealtygroup.com. You can email me, Brian at Sinkoff Realty Group, or send me a message right here on Facebook. All of my clients are going to get that in 2024 in this competitive market.
I mean, it's something you have to do eventually anyway, right? You have to do it once you get accepted
correct.
offer. And
It's just-
might as well do it up front when you don't have the craziness of offering. And,
Right.
Do it up front and you're 90% done.
Here's the thing, Brian, I want to start looking at houses in February. Great. Let's hook you up with Drew right now. You get that done by the time late January, February rolls around. Here you are with that underwritten
approval.
underwritten approval, which is
It's good for 90, 120
phenomenal.
days.
It's a phenomenal thing. And I think as this is why, I mean, I'm going to toot horns here. This is why I've been successful. This is why Drew's successful. You have an agent, you have a mortgage, a guy on the mortgage side that navigates the ebbs and flows, navigates the ebbs and flows of the housing market. Come on, Drew. I was a freaking popper back in the day, dude. Look at
I can see people crashing.
No, we navigate. How does anyone take me seriously? But you know I love you. I'm myself. You know what? I let my freak flag fly.
Trying to keep
Dude,
it a
I
little
let my
interesting.
freak flag fly on these Facebook.
Try to
groups.
keep it a little interesting.
Yeah, but seriously, we know how to navigate. I'm not joking. The ebbs and flows of the market. We know how to get our offers accepted. We know how to to work with everyone on the transaction, whether it's pricing a home. I'm talking about the real estate side, pricing a home, getting an offer accepted, pricing the home correctly, knowing as a buyer where we should come in at. And that is like a huge thing.
45 years combined experience.
Yeah.
And 2 people.
That's a lot.
Most people buy 2 or 3 houses in their life. We're doing that a week. So it's experience. We can see the market. We know where it's heading. We obviously read it, breathe it, sleep it on a daily basis. I get up at 4 or 5 every morning. I'm constantly reading about interest rates in the market.
Drew.
And we try to give as best guidance as we possibly can.
Drew sends me texts at 5:30 in the morning. I'm like not even joking
that
about
today,
the market. I'm up at like 6:15, getting my gym on at 7. So, yeah. So that's it. Before we check out of here, again, like this post. We have 2 likes, but we do have likes from the post yesterday. So we're gonna pick a winner here in a minute. But what we will say, Drew, what are your thoughts for 2024? Where do you see this thing going? Just your crystal ball.
Crystal ball, and I'm going to do a lot of work on this over the holiday, and come out within the first week of January. But I think rates will be anywhere from 4.5% to 5.5%. I see.
I mean, what by the middle of the year?
I would say by the middle of the year. I think a lot of people expect a recession, maybe first or second quarter. Now, though, it doesn't look like a very deep recession. It might be a very small recession, and what they're trying to do is that nice soft landing that the Federal Reserve is trying to provide. And right now, it has some teeth. It might actually happen where we have a soft landing and not a very
And what would that
deep
mean?
recession.
What does that mean for the kids?
That means a lot of people won't be out of work. There won't be a lot of unemployment, meaning that the economy will retract. The definition of a recession is 2 consecutive quarters which is basically 6 months of negative economic growth. And it might be very small, might not be that deep, which means you may not have a lot of people with a lot of pain. I think the Fed is trying to inflict some pain because they want prices to come down, inflation to come down, but it might not be that severe. And then the biggest prediction that a lot of people expect, and you survey 100 economists, they feel almost about an 85-90% shot in March, the Federal Reserve meeting, they may actually lower interest rates. So that will be big for the markets.
And you're talking about interest rates on credit cards and things of that nature.
That's the
consumer
rate,
consumer
which
rates.
translates to the prime rate, credit cards, car
Ultimately,
loans,
it does affect the interest rate as a trickle down.
Right. It helps the homeowner.
Right.
If you have a home equity line of credit that was at 3 and now it's at 8, when that goes down, obviously you're not spending as much on a monthly basis for debt service. That helps you in terms of living and the economy. So that's what we're hoping for in 2024. So I would say almost 85% chance in March, April, May, June. They're saying 100% chance to drop rates by 25, even 50 basis points a pop. So that will be good for the market in terms of interest rates, but we hope that translates into those sellers listing their house and trying to get those houses on the market and upgrade or downgrade. So
all right,
that seems to be the biggest challenge of 2024. I think interest rates will cooperate, and now it's a matter of the seller's going to give up their house and create some supply on the market.
All right, so we have about a bunch of names that liked this post. They also liked the post yesterday. So Drew, I wrote the names down. Multiple names. Now, you cannot be a real estate agent to win the $25 gift card. You have to be a Capital Region resident, and you can't be a relative of me or Drew. So those people have been eliminated. So Drew, I want you to shut your eyes. I want you to I'm going to move your hand up and down. Okay, then you pick. This is such a scientific way. Oh,
Amanda,
you are the winner of the $25 gift card, which is coming to you in the mail, courtesy of the Sinkoff Realty Group.
I think I know Amanda.
You do?
I think I can mail it right to you.
Yeah, I mail it right to Amanda. We had Ben, Kara, we had like 5 people on this list. Oh, there she is. Amanda, you got the gift card. Yep. You got it. It's going to be mailed to you.
Happy holidays.
Yeah, nice little gift card, $25 gift card right in here.
You'll have a New Year's Eve drink on us. How about that?
Think of us. All right, so that's it. We want to wish everybody a happy fall. We appreciate everybody tuning in these past 12 months.
And thank you to all our clients. We appreciate the loyalty, the trust that you put into this type of transaction, and look forward to talking to you, your referrals, and anybody else we can help in 2024.
And even if you have a question about anything real estate related, don't hesitate to reach out. The one question I don't like is, Brian, I'm in the middle of a transaction. I don't know what to do. I would have said, sorry, you should have used me as your realtor. Ask your realtor, right? You probably get those, hey, Drew, we went somewhere else, and now we have some questions. It's all right. We don't want to step on anyone's toes.
I have one of those right now.
Yeah, isn't that awesome?
The bank was charged her $7,000 in points, so of course she switched to me. And guess what? We have to close in 15 days.
Yeah, feel free.
They wasted a couple weeks of nonsense.
So thanks so much, everybody. And like Drew, I want to reiterate what Drew said. Thanks to all my clients, all my friends out there, all my Facebook family, and just everybody. I really appreciate the love. This was a big year for me. I opened my own firm after 12 years in the real estate industry. Things are going well. I hope I got some big goals for 2024. I got some big things planned. So stay tuned, Bonnie. Happy holidays to you. Happy holidays to everyone. Happy New Year. We'll see you back here next January. Congrats, Amanda. And don't forget, if you're looking to buy a home, sinkoffrealtygroup.com. Drew, give them your info.
drewsteam.com.
All right. Take care, everybody.
Happy New Year.
Happy New Year.